welcome to this session. We talked a lot about the whole Japan FinTech Festival is anchored around the new momentum we're seeing in the market. FinTech is a very critical part of the ecosystem and so forth. And in this session, I want to have a candid discussion with 4 leaders in the VC world about how they look at the Japan momentum. And when we invited the 4 speakers, I thought it was actually kind of interesting because each VC they represent has a very different kind of structure or approach to investing. And I would like to start with each of you to talk a little about what it is. And I want to start with Taira-san. And Taira-san and I, we had lunch last year, a long lunch I thought it was. And what we found out is we had something interesting in common. Both of us started our lives as AI researchers. Taira-san started at 35, we call it knowledge engineering.
35 years ago, yes.
Yeah, 35 years ago, and I did that 33 years ago when I came to Japan as a researcher. And I think both of us abandoned AI in between. Yeah. And it's back, and we're embracing it again. And I would like to start, Taira-san, if you can give a little bit of an idea what you're doing with AI in VC today.
First of all, very excited to be here because in Japan, this kind of international setting is very rare. So I'm so excited to see many different kind of people from around the world. And then a little bit of my background, and as Peter mentioned, that 35 years ago, my master's thesis was using AI for robotics design. So it's a combination of the AI and robot kind of things. And at that time, we had a lot of dream and also conversation, but it never happened before. Because no computer power, then no deep learning, just a shallow kind of running, like a neural network, we call it. But after 35 years, and then we are seeing the now a giga trend of AI. So that's come to my our current sort of initiative. It's the Edgeof. The Edgeof are formed by myself, Atsushi, Taira, and also Taizo-san, the younger brother of the Masahiko-san, and also one more partner. So 3 of us funded the company called the Edgeof. And the Edgeof is kind of VC, but not just a VC, but try to create a platform for Asian, pan-Asian basis for startup to support, together with a like-minded, mainly strategic investor, corporate and conglomerate, who are interested in a global startup, mainly AI and deep tech, and then try to transform their business for the next generation. So basically, we're trying to bridge between global or maybe local startup to the pan-Asia basis together with the big corporation and also conglomerates, right? So basically, we are fundraising now, and then targets around $100 to $200 million. Because it's not so big, because we define it's more like a starting fund or sort of a scouting fund. Basically, we scout maybe top 20, 30 game changer AI deep learning startup only from around the world. Bar is very high, who are interested in coming to Asia, and also conglomerates and also corporates are interested in that kind of area. Then we will invest. And then why scouting fund? Because if you look at the current AI deep learning, deep tech startup trajectory, it's quite swift and fast. Right, maybe first, the round will be $10 million, but next round in 1 year, maybe 100, 200, right? Suddenly jump up. And then I don't think, current VC structure can take such kind of the speed and also amount. That's why we are thinking about to form the scouting fund, and then forum could be more on-demand basis. Maybe we're going to form the SPV or, some small fund and to work together with, our partner. So it's a more upside is unlimited, in that sense, because the big corporate have the big check if they see it's strategically very important. So that's why we like to create a more flexible approach to find, such kind of the market startup. But also not enough, because in order to find such kind of the rare species, the human being cannot be 100, because we need to scan maybe 10, 20,000 startup around the world. How can do it? How we can do it, right? So that's why we decided to develop the AI platform to find such kind of startup from around the world. Because we have more than 200 VC network in the world. Because before the Edgeof, Taizo and I studied the family office and then invested in 170 startups in the world, and also more than 80 VC investments. So we have a wide network, but we haven't utilized it because manually it's not possible. That's why we decided, okay, let's harness all those startup and also VC globally onto our AI platform to get together, to gather the information, and the AI will select right timing, right, the startup for the right amount of the maybe variation and also check size. So now we are developing, and then at this moment, the alpha version is already out. Then next month, it could be a beta version.
Taira-san, thank you so much, and it's great to see the circle completely closing.
Yeah.
I would like to move on to Ganesh from Quona. If you can share a little bit, what is Quona doing, and what's so special about how you guys invest?
Sure, thank you. Thanks, Peter. And I think we started talking about JFF a few months ago when we met in Singapore. So I think glad to be here. Thanks for inviting me, and glad this worked out. So Quona is a global fintech fund, and there, unlike number of global fintech funds, I think our differentiation is we truly focus only on emerging markets across Asia, Africa, LATAM, and Middle East. And to prove that we are truly global, I mean, I have my colleagues also in the audience who have come all the way from the US, in New York and DC. So the other aspect of Quona is that we basically were born at the cross section of fintech for inclusion or backing financial innovation models for impact, while ensuring that they create market scale commercially and deliver market returns. And that's kind of the balance we straddle as a firm. In terms of impact, one of the things we were talking about is our early partnership was with Axion, which of course has several decades of experience in financial inclusion and microfinance. And that was a good foundation of framework of impact we started with. But I guess there has been rapid evolution in digital finance, both on infrastructural side and on consumer side. And that's evident in the 75 plus portfolio companies now we have invested in. And we have overall 4 funds, 3 early stage funds and 1 growth fund, and invest across 14 countries actually now. With a lot of focus on Asia, Latin America, and evolving focus in Africa and Middle East.
Thank you, guys. I'd like to switch to Mark. And Mark has been exclusively investing in Japanese startups, and would like to learn why.
Almost exclusively.
Almost exclusively.
But let's say exclusively. So yeah, indeed, we're based here, and in contrast with Ganesh and Taira-san, we do make some fintech investments, but we don't have any particular deep expertise in fintech. As far as AI goes, we have an AI investment or 2, and we know how to spell AI. Mm-hmm. So that's our expertise. No, the story is actually before I moved here. So at least I think it was about 10 years ago. Actually, this year I was visiting Japan for one of my European investments that was expanding to Japan. I had the fortune to meet my future co-founder Matt Romaine, who was an entrepreneur here, founder here at the time, and building his company. He later sold the company, but we hit it off, and we kept in touch. We shared over the years. Eventually, I moved here. That there were a handful of observations we had about the Japan venture ecosystem. The first was that Japan is on the cusp of something major. There's a massive renaissance, digital renaissance, coming in. This is maybe 5-6 years ago we had this observation. The second is that even though Japan is one of the world's leaders, maybe the second in the world of asset management and capital, most of that capital was quite conservative, very unlikely to trickle down to early stage startups, for example. Perhaps similar to the conservative nature, we also observed that a lot of those few VCs that existed typically would not lead rounds. They would follow, and they would invest in packs, and often not in very early stage. And by the way, our confrères, peers here at Incubate Fund are one of the rare exceptions to this. Yeah, so we tend to see eye to eye on a lot of things. And then a couple other observations. One, the capital was very few VC funds actually had GP teams that were former entrepreneurs in Japan. Another, very few international, and essentially no women. in VC. So all of these things we thought, well, there's potential opportunity here. Perhaps the seventh observation, which was maybe the most important for our strategy, is we observed that there was an absence of, in society, the greater society as a whole, an absence of awareness or admiration or even prioritization of startups. So a young person would be encouraged to go to the right university, then join a large company, work for life, pursue a career of stability. That is something that I had witnessed actually in Europe as well. That was very much the cultural state of affairs in most of the European countries 20 years ago. So we tried to come up with a fund that could address these things. So Shizen Capital, very, very in short, we do a few things. We invest in only early stage companies, essentially all Japanese companies. We're happy to follow other VCs, but usually we end up leading the round. We're not afraid to. We move pretty quickly. We invest across pretty much any sector. We're former entrepreneurs, Matt and myself. We both built companies before. Obviously, I'm not Japanese. Matt is half Japanese, so we're fairly international. We're both men, of course, but we've committed to our next GP hire will be a woman. And we have a couple programs related to that. And then the final point is we found a way, and this is where I want to just give a deep bow of appreciation to METI and the Tokyo Metropolitan Government, and later the Cabinet Office. We found a way to give retail investors, Japan residents, a tax break if they invest in a VC fund. And so if they invest we set up a vehicle, so if they invest in our VC fund, they can deduct their investment in our fund from their taxable income in the year they invest. Now we have a lot of LPs that are foreign, outside Japan. They obviously don't get the tax break, but they invest for different reasons. And so this is an innovation that was actually a big success and helped the transformation of countries like France and the UK in terms of building startup ecosystems. And we're hopeful that this can actually make an impact here in Japan as well.
Thank you for that here. And it is an interesting scheme. And if you're not aware, Japanese taxes are quite high. And this can actually give you a significant kind of discount on your risk. So it's an amazing scheme. Homma-san, Incubate Fund has a very different strategy, and you're kind of like early stage investor. Share a little bit of how you guys work.
Okay. I've been in this venture capital industry over the past 20 years and over. And as Mark mentioned, back then, most of the VC are the corporate type. The corporate venture capital and the corporate have the VC arm under their group company. So back then, when I started the Incubate Fund in 2010, was a very, very huge partnership type of the venture capital, where each of the independent GP taking full responsibility and commitment to each of the investment and the startup, and also the managed fund itself. Then we started this Incubate Fund. The concept that we could be the independent GP and lead round, and also build a startup together with the founder. That's also the origination of the Incubate Fund. And since back then, the past 13 or 40 years, we have not changed anything about our investment philosophy and strategy. Then now we became one of the largest seed and early stage tech VC firm in Japan. Also having operation of the Asia as well. Then in Japan, we have many investment technology like space technology, the B2B SaaS, healthcare, the entertainment, gaming, any kind of the technology startup could have the potential go beyond Japan's market. That's our motto. And related to the fintech, I set up together with the SMBC, the fund called the SMBC Asian Rising Fund. And in the mid-stage and growth stage fund to especially focus to invest in the leading fintech startups across Asia who could leverage the SMBC asset going forward. So this, I think, in the really good case study of the large enterprise, Japanese enterprise, will plan to achieve the open innovation together with the fintech startups outside Japan. That's what I'm doing.
Thank you so much. I want to go in the next round and do some talk a little bit about the potential of investing into Japanese startups. What is it? What are your quick thoughts around the potential of investing in Japan right now, and maybe one or two challenges you see at the same time as well. Maybe Taira, if you want to.
Sure, yeah. Actually,
start.
I invested in Japanese startup, maybe more than 30, 40 startups, and also globally more than 100. And obviously, sometimes Japanese startup will be under-evaluated because unfortunately, most of the startups are just focusing on Japanese market only. However, I haven't seen many potential on such kind of startup can be outside of Japan. But no such kind of a platform and also pathway at this moment. That's why, even though that potential is huge, maybe not just Japan, but also APAC level, but mostly maybe sometimes investors very conservative, don't need to go out and just focus on Japan and then make IPO quickly. That kind of forces that was happening. But I think there are a lot of startups that have potential to go out, but it's not unlocked yet. That's why I'm so excited to see that more international investors are coming and then encourage Japanese startups to get out and then support them to get out, right? So we also want to support to get out.
Thank you. Ganesh, I know you're not investing in Japanese startups, but how do you look at it from outside? Do you sense you're missing out on something?
Sure. Yeah, it's kind of like the trick question when you're cold called in a class to answer a question you definitely don't know the answer to. But I think we have an outside-in view into Japan, right? And by nature of being global, we obviously look at ecosystems where fintech is evolving very closely. And we are in, like I said, more than a dozen countries. So by nature, we are global. By nature, we look at markets which are evolving rapidly and in interesting ways. And I would say there are probably a couple of things in the Japanese ecosystem that's caught our attention. I think there is the rate of change of globalization, or at least interest in getting out there and going international, has increased. Like Taira-san said, can it be better? Of course. But is it getting better compared to where it was 8, 10 years ago? Absolutely. So we say that as a huge potential. That's one. The second is, I think even within Japan, the market in terms of outcomes and exit markets and IPOs and public markets, if you look at it, it's a lot more robust than a number of other countries. And interestingly, there is appreciation for younger companies to be able to get out there. That's the second part, which is interesting. And the third is, I think we are starting to see entrepreneurs and talent which actually has a global outlook. I mean, it could be talent coming back home, but with more global outlook than we have seen in the past. So the combination of that, plus the last part is we have portfolio companies which actually are starting to look at Japan as a potentially interesting market now as the market opens up, more so than before for fintech. So combination of that does make it a lot more exciting, and the rate of change is promising.
Thank you. And Mark, obviously your answer is the potential is huge because you're only investing in Japanese startups. But do you think it will boom? Will your LPs be billionaires soon?
Well, it's always important to ask any VC, if you're considering investing in a VC fund, is where are the yachts of your other LPs? So if the GPs have yachts but the LPs don't, that's obviously a red flag. So at the early stage, we're convinced that this is Japan early stage venture represents the best asymmetric upside of any financial asset class worldwide right now. We're at a point in time. It's not going to last, of course. Things go in waves. But you have the G7, right, which is meeting again soon here. Should meet here, probably.
It could be here.
But right now, we're at a point in time where it's not the G7, it's the G6 plus Japan. The macro environment is very different in Japan relative to the other 6 countries of the G7. That's obviously not going to last. That's, there's another factor external, which is that the rest of the world, the West, has kind of lost confidence or comfort in investing in the other largest Asian market, which is China. So that also has an impact where people realize, a country with good, solid rule of law and stability. That's also very interesting. Of course, the currency is pretty inexpensive right now too, which attracts people. But then domestically, And we have a situation where, I mentioned it's a digital renaissance. I mean, you have a couple decades of corporate stagnation. The Japanese companies have $3 trillion on their balance sheets, which, by the way, is starting to erode because they are confronted with inflation. So even just sitting on the cash is no longer very appealing. There's a desperation to do DX, to transform digitally. And a lot of that transformation and that innovation is going to come from startups. So at the very early stage, we're very bullish. Now, long term, or are we going to build unicorns? So our focus at Shizen is actually, we invest in companies that can become centaurs, $100 million valuations. And if we can do that, yes, we'll make our LPs billionaires. We don't need unicorn exits to have our LPs become billionaires. That's our positioning with the early stage.
Mark, thank you so very much, and that sounds even better, right? So you don't even have to become a unicorn to become a billionaire. So that's an interesting, it's interesting insight today here. And I want to repeat again that this shrine is dedicated.
Still figuring out the math.
This shrine is dedicated to success in business, and amazing magical things happen here. Homma-san, how do you see the potential in Japan right now?
Okay, I think the potential is always related to especially from the coming 5 years, the national security and economic security, and also some sort of the tension between the large country to Japan. Especially for the space technology is one of them. Also the data security and quantum computing, and also some sort of a semiconductor, how we manage the supply chain. These types of technologies are all related to startups, and where we need some sort of the Japan's born startup, we need as a society and also the country. This is really good for I think, to cultivate domestic potential, as well as the collaboration in the future with a larger market like the US and Europe and also the Asia. So this is one of the really big investment topic that we all the general partner, especially internally, are thinking about. And second is some sort of global common agenda like clean tech and green innovation. This is also good to I'm feeling that by nature, many of the Japanese enterprises are having a very strong appetite to adopt the new cutting-edge clean technology and any sort of the clean tech-related thing as a user, as well as a producer and a developer. So this clean tech is really the important factor. The two things I think just drive the acceleration of the Japan's innovation, the startup innovation for the future.
Thank you so much. We talked about unicorns very briefly. The Japanese government has set a strict goal to reach 100 unicorns, I believe, by 2030. What do we think about that? Taira-san, give it a shot.
Yeah, of course, it depends on the definition of unicorns, but I see unicorns more like a rare species, right, originally, not just a valuation. And then I think if Japanese side are more focusing on differentiation or game-changing, so that deep tech-driven, then being rare species, it is possible. But if it is a Me Too product or Me Too service only, of course, impossible. Very simple.
Ganesh?
I think we should be careful what targets we set. If you look at the last 2 years, I think we'd be careful about setting unicorns as targets.
Thank you. Mark, you kind of answered the question, but are we going to get those 100 unicorns?
Okay, so here's what needs to happen. France, by the way, reached 36 unicorns with 36,000 seed stage startups in 15 years. So you need 100,000 seed stage startups if you go on that metric, and possibly a similar time horizon. So by 2030, maybe that's a bit overly optimistic. But here's what needs to happen. M&A, mergers and acquisitions. M&A needs to be acknowledged as a laudable exit in the mindset of founders. Corporations need to do M&A. Also, there was some research recently, I wish I had the exact stat, but over 70% of the unicorns in Europe became unicorns. They did M&A. They grew by M&A. They didn't grow only uniquely by organic growth. They did external acquisitions too. So we need a stronger culture of M&A. If there was one thing I would say needs to fall in place to make it, it would be that.
Thank you, Mark.
Yeah, I think that target itself is important to encourage and facilitate the VC and the startup community itself. But the unicorn is very, transparent. I think we need, let's say, the player like Shohei Ohtani. The very iconic, the very, very big monster to be coming from the Japan's market. Even in Japan, the GAFAM plus some sort of Magnificent Seven is a lead, let's say, industry in the whole in the U.S. Likewise, we need to have the Shohei Ohtani, and we need to have the next generation of Sony and Honda. That's more iconic one I needed.
Homma-san, thank you so much. I think in order to get 100 unicorns and you do the math, you'll find out that there needs to be much more money coming into Japan to do that. It can't do that with domestic investors. And that's also the reason why, together with Kito-san, we decided to create the Japan FinTech Festival. Is we need to bring a lot of things together into Japan to have investors and innovators, etc., to work more closely together. And that is really why we're all here today, is to connect and start connecting the dots, so that I think it can be done. And I agree with Mark, setting a crazy goal is actually not a bad strategy. But in order to execute on this strategy, besides M&As, which can create bigger companies, I think it also means we have to bring the world to Japan. And that's why we have the Japan FinTech Festival. Thank you so much.